Hello guys, hope you are enjoying the weekend. This pair I didn't analyze last week due to time constraint, so I would like to analyze the gold and I would like to update it. If you see on the monthly range, you can see this is the range actually we are operating for a couple of months. If we consider 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 months we are basically operating here. And there are three scenarios. If you can see clearly that one, the gold has reached to this price range before, and it was in if you can see, it was in August 2020 during COVID, where when the whole world got into uncertainty. The second time it came here was here. Again, it was on 2022, and this was, I think, if I'm not, after a couple of months later of Russia-Ukraine war, when the war was escalating and the tension got very high. The third time we came here on this year May, 1st of May. You can see in the month of May, not 1st of May, and now we are in the same price zone, and you can see we made a double top here, came down here, we make a triple top here, then came down here. Now this is the fourth time we are knocking the same price zone. As far my experience goes, if any price zone is knocked more than twice, it becomes fragile. It means it can be broken very easily. So on considering the last month, this is the November, and December just started. We got one day of December, which was actually the last week of November. So this month I am disregarding this green candle at the moment, but the last month we have seen a very good bullish candle here. So before I go into whole thing, I would like to show you that the actual range is from here to here in monthly basis, and the 50% of that is lying this dotted line. This red line, dotted line, is actually the 50% of the total range for the last couple of months. You can see it's a very wide range we have. I'm sorry, it was not 11th, it was a bit it is more than almost 3 years. I made my mistake. The range was here is 11 months, but the whole monthly scenario that more than 3 years we are ranging here gold, and gold failed to break this area once, twice, and this is the third time it is trying. On the flip side, bearish side, we have seen that when it made the double top here, it came down this range, and it again went up to break this, and again when it came down making the triple top. Now this time it didn't went down to this level. Guys, this video is going to take a little bit long because I'm going to show the whole structure, market structure, the price action as well as pattern, so please bear with me. So this time it didn't break down to this area, which was likely to be breakdown, but we have seen that it made a double bottom here in monthly range in October, and it started going upward. So the traction towards lower price is less considering the monthly scenario. Now here we can see that there is nothing we can have a take except that this price zone has been is been hit by the price, including 1st of December. This is the quadruple or fourth time you can say. And this single day candle, though it is monthly, it is showing, but in say if we go to a single day, even it is the candle is same. So a single day candle, this monthly candle is showing very high momentum towards bullishness. So we have to be very careful here considering this, and there is nothing we have in the monthly. And apart from that, I would like to show you the range. The current range is from here to here, not not here. So if we consider the current range, this is our 50% of the current range, and it has been taken out already, and the whole range has been accomplished. Almost a few dollars more could have achieved the same. So coming back to weeks, now we have the same thing here, and there is no sign of weak double top, because last time I have explained that a fair value gap in the weekly candle has been left here and was left here, but it has been taken out right now. So this fair value gap is gone. It has been taken out already. This fair value gap has been taken out from here. So only this fair value gap in this whole trend has not been addressed. And now we have, of course, new fair value gap is waiting here. And if we go a little bit high, and new fair value gap has been already created here in last week. So this fair value gap is can I do it again, please? So please bear with me, because I'm drawing it just here. I should draw. No, I should not draw here. I should draw a little bit further so it doesn't mess up with the candle. So fair value gap left in this two candle, as well as the fair value gap already left in this candle also for last week. So this need to be addressed one way or the other. When it will be addressed, I don't know, but there is a fair value gap. And in weekly, we don't have anything, no double top, nothing. So it's still, so monthly, no double top. Weekly, we don't have any double top. Now coming back today, there is lot of thing has been drawn here in day. So already I explained that this was the half of the current range, and it is the half of the whole range if we consider the bigger picture from here. So this is half of that, and this half, this dashed line is half of this range only. Hope you understand that clearly. Now question is this: I was looking for some extra explanation that when the price in weekly, if we go, but it tried to went up, what resisted it here and put it back. So first thing you can see, if we consider this guy and this guy, this green candle and red, this is the double top on the weekly chart. It is very clearly, you can see. If you would like to see, I can draw it so you guys can understand. This was the weekly zone which created this double top. I'm going to delete it just for you, for the clarity. Let me draw. So this was the reason, and it pushed back the price here. And if we measure, the most interesting part, if we measure this double top of weekly, and we see that it almost covered the 50% of the weekly. A little bit less here, but it covered. It didn't come. I beg your pardon. It didn't come to 50%. But this was the weekly double top. This guy, this red candle, and this red candle pushed the price back. So this was the cause to push the price, made it bearish. And then again, there is nothing much except the FVG. We can see very clearly in weekly at the moment. So let me get rid of this. We don't need this now. And now, why it created a double bottom here? Is it a double bottom? Because we don't have any double bottom here. So I went back to day, or even if I go to month, there is no double bottom. You can see in weekly there is no double bottom. So I went to day. In day time frame, if you see now that this double bottom, let me mark it. This is the double bottom we are talking about. What created to stop the price here? So I mark it in black. So if we see here, this has been created by this red candle. Okay guys, now someone will ask that I told previously I need a double bottom where it has to be green and red. Sorry, red and green. So this not red candle, this green candle is the logical. But what I am trying to say, that any opposite candle means if it is a upward trend, not downward. Upward trend means the opposite candle should be red, and in downward trend the opposite candle would be green. So any single opposite opposite color candle in a upward trend will create, is a very powerful, because can you see this from here the price has been pushed up here, and it was a very strong momentum candle, this big one, but this red small guy has stopped the whole trend. So that's why we always try to mention that this source of opposite candle in an upward trend is very powerful, and this guy stopped it, the whole thing here. So if you measure this in like this, we can mention very clearly that this is the guy which has created the down up double bottom here. This guy has created the double bottom in day time frame. So this is the thing which made it double bottom here. Now again, when the price went up, we have seen that a double top has been created here, but that double top has not been honored at all. The price went up, just made a double top, but it didn't came down, because if we measure the depth from here to here at least the price should have come down to here, came down here, then make a cup and handle, then but it didn't. It just broke out of the whole double top, and it moved upwards. So this I have left drawn for two reasons, because if the price comes down, then we need to consider this zone as a powerful zone, because it has not been honored during the uptrend, but so far my experience goes it will be honored during the downtrend. So I leave it like this. Now as we are talking about this range, this is the total range, guys. Now you can see that the price exactly half is here of this range, which I have mentioned in monthly already. If you guys go, this is the half, this dashed line. So coming back to days, and this dashed line say this is the thing. So if you guys see very clearly, this half is here, it is 1374 pips. So if we just think after breaking this neckline, it will go the same. $1,374. Can you guys see it is? Let me make it bigger a little bit. Hold on, let me show you guys more clearly so I can draw it properly. So it should be from here in the same space. If we draw, it should be 1347. Come on. No, it's big. Okay, somewhere here. So which we can see it almost match. If you guys see that from here to here, it almost match the depth from here to here. So, and that is our border line. The last highest price we have had here is this is the border line. It should be actually, the border line should be a little bit low, and this box should be a little bit low. Hold on, so I can show you guys clearly. The box is a little bit higher than the edge. Let me put it in perspective properly. Yes, and this is the total we are talking about. This is the small range we are currently operating, and let's make it a different color so we don't fall in any trap. Let's make it green, and let's draw the bigger one also. So this is the bigger range we have, and we will make it red. Okay, make it red. Leave them alone for the timing. Okay, let's get back to. So you see that this is the previous highest, which is 2086 or something, 83, something like this now. And this time when we draw the same thing, just same thing, if we draw it from here, and it is almost 1347, we require 35 and a little bit. Sorry guys, please bear with me. 37, 41, something like this. Oh, it is, why it is going out? It is 1055 is actually, but this is the actual thing. Yes, this is the range we have here, from here to here, among, and it has almost reaching that level already. It almost. So thing is this, what will happen next week or next month is very important here. There are some fundamental change. We are listening that the US Federal Reserve rate has reached to its peak, but they have not yet decided whether they will increase it further, as they need some more data of their economy to see if they will increase it or they will stop here and start decreasing the rate in the next 2024. So those have severe implication here, because if the rates goes down, people will start buying gold more. If the rates goes high, the people will start selling gold more. If the job opportunity goes high, I mean more jobs are created, less unemployment, then the gold will come down, because more economic activity will require more capital. So people will start liquidating their gold and create transform it into money so they can invest it in their business. So all these things will come into play in 2004, so be careful here. My way of seeing thing at the moment is this, a little bit complex, because we have both sides playing around here, because first of all that we are hitting this zone for the fourth time, and that is a matter of consideration, big consideration. And this time if we see that the range we are talking, if we go to week, we can see it very clearly that this time prior to that, from 2023 it came down and it made went up and it came down in the same range. Can you guys see? And after that it tried to break this area 3 times, 1 2 3 times, but it failed and it went up again. And this time it didn't came down to any of this zone, neither this zone or this zone, anywhere here, but exactly here, which is just below, a little bit below 50%, and made a monthly double bottom, and it started went up. And so the upward traction is a little bit high this time due to the prices returning from here. So the upward traction is I mean the buyers are more powerful at the moment, that's why they didn't allow it to go down further below this red line. So coming back to day now. Then now we have a double bottom here and double top. It didn't honor and it started moving up. So here in my sense, what I'm going to show you a little bit complex, so bear with me. First of all, if we draw this line from here, you can see that the volume is getting very low. Can you guys see the volume here? Hold on, I need to change it as a arrow. So you guys see the volume here is getting low, 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 low. And what I did, I tried to compare this current range, the volume, with the previous one. If we take this guy from here to, hold on, to here, just disregarding this leg. Now you guys see this? Can you guys see very clearly that here there is no volume at all, and that's why the price failed to sustain at all in this area. Can you guys see there was no volume? It was a 4-5 minutes move from something from 2061 or 58 to 2083, and there was no volume, no buyers and sellers participation was there. The price moved up and came down in 3-4 minutes, and we couldn't find any volume. But this time we have a small little volume even exists there. Now question is this: if you can see very clearly, whenever the volume goes down, you can see there is a red candle. Whenever the volume goes down, you can see a red candle, and whenever the volume goes down, you see there are so many, because the buyers, there was no seller interested to sell their gold less than this price at all, so the volume went down. And on the top side now we are seeing that this candle is only one single day candle, so a lot of thing needs to be played here before we decide on just simple volume. But at the moment, right on 2nd of December, there is not significant volume to support the price to move upward. And you can see this red line, guys. This is the concentration of the highest volume. It means that this price, this red guy, 162.99 is I think, hold on, 165.02 is the price which has the highest level of volume has been transacted. And if you see this black line here and black line here, this is the actual highest volume level on the top and lowest volume level on the bottom. And apart from any move upward and downward, always creates or increases the probability, decreases the probability that price will move further on the upside. So what is the take we are going to do now? I have very simple complex thing. So this is the 4th time it is knocking. Maybe it will be able to break it here. Now if it breaks here, what will happen? Very simple and easy. It has covered its 50% and it will break this big neckline. Can you guys see? This big neckline will be broken. And if such a big neckline is broken, then what we can see, let us go to weekly so we can make the drawing easily. Let me get rid of the volume thing, which I already explained, so we don't need it anymore. So if this neckline is broken, what will happen that it will cover this whole, you can see, hold on guys. So if this neckline is broken, from here to here we can see it's a big 2735 pips. So if this neckline is broken for any good reason, then it will move the same on the top of it. Okay guys, this is one thing. Let's make it a different color so we don't mess up with it. Okay, And if we measure this guy, if we measure this guy, okay, the 50% will be here, the 50% will be somewhere here. So if this neckline is broken, and if we see the price action doesn't come down below this red line, I mean the price action will be, if it breaks up like this, and let me draw it in day time frame, because weekly time frame is much larger, so let me reduce it in size also. So if something like this happen, that the price is going up, try to test once, going a little bit up, try to came down, retest or take out this fair value gap, but didn't break this box, the rectangle lower side, then we are expecting the price to be somewhere here, 22,118, something like this. And once it reach there, then we'll analyze and see what is going to happen. So this is one side. The other side we can see is this: if the price moves up and came down and moves up and break this area, I repeated, this area, then the price will come and make some reaction, which it didn't honor the day double top during the going bullish, but in bearish it will show some price reaction, and at least we are expecting it to be here. But this place will be very difficult around 2065, where we have mentioned that where the concentration of volume is very high. We showed it in the volume case. So this is another thing we have to see, that nothing goes wrong here. So let me make it red, and this is green. I think this is the initial thing. Or if we make a curve, if we measure the same thing on the downside, what happens? Let us see. You see guys, this will come to that 50%, the red line area. So that's it for gold. I don't give any lead at the moment for gold that you should go open the trade at buy or sell at these stop loss. I cannot, because a lot of things needs to be happen this region. Otherwise I will not be sure. I don't want my followers or subscribers to lose their money, and a lot of uncertainty is involved there. Moreover, if you guys see, if we visualize next week, where is next week? I want you guys to consider these issues. Next week we have very big data USA on coming Friday: average hourly, non-farm payroll, charges, unemployment rate, real UMA consumer sentiment. Now, huge data will come on coming Friday. So I don't suggest, because unemployment claim is also here, as well as other ADP non-farm employment changes. These things will have a severe impact. On Tuesday we have job opening. If these things goes negative, I mean less than this, and this is less than expected, forecasted, of course the price will shoot up, and the gold price will shoot up the way I showed it here. However, if the data is good, it will, and once it does, after coming Friday, if we see that this upper red line is respected severely, then we think we will have a double top on monthly, on weekly, then after the end of December, on a monthly we may see a fifth time double top. This is first, second, third, fourth, but fourth time I don't expect it will be bearish. I think it will break out. I think, I'm not sure, but I think it will break out, because any time any price zone which has the price has reached for fourth time does not sustain. However, market has its own rhythm, because you guys can see that this area the market has been heated by one, two, three times here in couple of days, and failed to break this area. This area is very strong, and they failed. At the same time, if the gold goes high more than that, we need uncertainty in the economy, we need recession in the economy. So all these things, so recession may trigger this, because some of the economists are saying that US economy may marginally avoid recession, but it will near to recession, so that will hit it high. Take care, guys. Thank you for watching. If you like, share and subscribe, I will really appreciate that. Thank you very much for your time and patience to watch the video. If you have any comments, or if you have a second thought, please do share in the comment section.